$1,000 into these two stocks could surpass your full-time job. The first stock is Urban Outfitters. Record sales quarter. Biggest sales they've ever had in a quarter. Retail is ripping right now. People seem to be Christmas shopping, holiday shopping, and at a time when everyone thought retail was dead, it turns out the few that have survived are making the best use of that monopoly. There's another company, IQVIA, ticker symbol IQV, that is holding up super well in healthcare. Healthcare has done awesome in the last few weeks, even as the market has chopped around. There was the crypto liquidation. There's Trump and China's dictator president miscommunicating over rare earths. They're meeting in South Korea saying that they're going to not do tariffs or reciprocal tariffs, and then the market sold off the next week. So everything is topsy-turvy in the market reactions, but healthcare and education, two verticals that are always cash cows, holding up. So this company, IQV, it's a giant clinical research support diagnostics, which I guess is like tools and data analytics on how people are doing and how their data is organized. It's basically like everything that healthcare is that's not doctors and employees at the actual hospital, I believe. So they had more bookings than billings, which is another way to say more demand than they actually billed for. Kind of like how all these data center companies are talking about having big backlogs and they haven't actually, collected the money to build the data centers or gotten the permitting to build the data centers. They're trading at high valuations. I don't know that you want to jump in these data center companies right now. We'll look at a few of them and look at the context of what was driving the market, what is driving the market, AI, GDP, and then look at these opportunities right now that I think, given the market's pulled back and gotten a little choppy, we could break out here, but why not get into stocks that are doing well regardless if we break out? So it's not financial advice, but these ideas look good.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's what we got going on for Urban Outfitters. Q3 revenues, basically 12% growth year over year to $1.5 billion. There's a record growth. And they had all-time highs for earnings per share and net income. So earnings per share being at an all-time high, it makes sense unless they bought back a bunch of shares, then their earnings per share would be, or no, I guess if they diluted a bunch, if there were more shares, the earnings per share would go down. Otherwise, you would expect all these things to go up at the same time, right? So, but if we look at this, they're not diluting. They're not increasing the supply of shares, which is good for a shareholder. You don't want a bunch of supply entering the market. They're a $5 billion company. They're in all of these different, excuse me for saying tier one countries where people have the most money that we use to buy stuff. And it's Urban Outfitters. It's a real brand. And they had growth across both, it sounds like their website and their physical stores. So earnings up as well as sales. So, more profit, more revenue. It sounds good. And they've got some hard-hitting brands. Anthropology. I don't know about Free People, but I'm sure if you know, you know. And they're trying some software as a service stuff. Obviously, that doesn't really fit with a retailer, but they're trying. So we'll see if that becomes a brand name newly. Their growth is across a lot of different places in the world, and also online and offline. So fewer markdowns, cost controls. I don't know how they're controlling the costs, but we don't have to look into that too much. And it all seems rosy. I mean, I know we're not supposed to invest in retail, but they seem to be really good at, getting people back in the store with coupons or deals or whatever it is. And we don't really have to worry too much about exactly why this company is doing so well. But we do know that retail is doing well sort of across the board. And we can see that if we look at some of these stocks. Here's Urban Outfitters, URBN. Pretty solid earnings reaction for sure, and it held. So if we look in here, this is that first day, 77.4, where it closed out here. So that's up here. Next day, pulled back a little bit. That's fine. And then once it got over here, it just kept going. And, it would be great to get in immediately right after it shows that it's worth more than 77.4, which is, what everyone decided. And by everyone, I mean, this is a lot of people. This is all of these people. I'll just show you. I'll just get rid of this for a second so you see what I'm pointing at. All these people decided it was worth that. And then even more people stepped in on that 77.4 day right here. So that's like 3 times the normal amount of people who are transacting. And these people matter too. These are like funds. These are, it's probably, I don't know exactly where to see that information or check that, but there may be fewer, individual entities transacting on this day than these days, but the amount they transact is much, 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 much higher. But we don't have to dive into exactly why this works. I guess I'm just pointing out that the reason I'm looking at charts, and I know everyone hates looking at someone else's chart, you might not use this software, but the reason is it actually does tell us what is happening supply and demand wise. Otherwise, why would we look at this, right? We would just look at, I don't know, just the 10Ks and the Edgar database and the SEC filings. So you can risk 30 cents and make $3. So that's the play. I mean, $3 might not sound a lot, but if we zoom out a little bit, we're right near all-time highs. $3 is over all-time highs. Even if it fails, that's a pretty sweet move. I mean, this is a crazy jump up, but look, they had a crazy jump up here as well. And if we look at some other companies, Kohl's pulling back a little bit yesterday as the market stayed up. So maybe hold off on that one. For that one, that first earnings day was here. And we see that here, 22.4. So it's kind of a gift if you do buy it off of here. But it would be great to have it level off and not just slice right through that. I'm not even saying that Kohl's is interesting to buy, but it's in the same sector. It did pretty well. It's not a bad idea. I think I may have actually mentioned it within the past week. Maybe not directly as one of these ideas. Typically in these videos, I've been giving 2 ideas per video and 3 videos a day, so 6 ideas. So there's a lot of ideas, but you know what? I think it helps to not just have like, this is the one stock that is going to save your life, right? So American Eagle is definitely in the conversation as well. Abercrombie and Fitch. This is the one that had, I think or was it Abercrombie and Fitch that had the brand campaign with the influencer? Someone can let me know in the comments. But American Eagle right now, it's just sort of marching up. I don't know. This is the third. It was marching up and then it had earnings. Sorry if this is just this gap is just weird because it it looks weird to me because it had a day where it went sideways. Just ignore me. The earnings are solid here as well. Okay. Abercrombie and Fitch, same deal. I mean, these things have just rocketed up. So everything looks good in this sector. I'm going with Urban Outfitters because of where it's at right now, because of this all-time high. But if the others look better to you, then, you do you. It just got to feel out what you're looking for. And then, kind of on the other side of the spectrum, and by the way, there is like a retail or consumer discretionary that I think is going up as well. I think this is what retail is, right? Consumer discretionary, maybe. IQV is in healthcare. I would have to say this has got to be XLV. So could XLV break out? It could. Is it smart to do technical analysis on an ETF? Only if you think a lot of other people are, including big funds. I mean, these funds like Tom Lee's Fund Strat or Kathy Wood's ARC, like they do have technical, whatever they call them, technical associate or whatever, the actual, or they call them a trader. Sometimes they call them trader and they just actually buy the thing instead of making the decisions, which is a little bit of a, rough title for not actually doing anything. But the point is, if they are looking at ETFs, maybe XLV is in a favorable spot to break out, which does matter because if we're looking at individual stocks, that'll help the individual stocks. But anyway, IQV, regardless of that, has a couple spots here where it tested and now it came down a little bit nicely, which allows us an opportunity to get in there. So that's pretty interesting. Maybe sort of tested it here and here, here and here, sort of here. But all you really need to look at within the past 6 months is just this, I think. So risk a few dollars to make 30. Something like that. You could even have a tighter risk and just look for a move up to 240 or something like that. But there's definitely room up here once it gets above 260. But this is probably kind of unsustainable. It's probably going to level off a little. Anyway, it moves 2% a day. It's not like you're holding your life in your hands with this one. I think it's super interesting technically. And then as for, what they do, they do everything that's not the people in the hospital and the doctors, I think, which are also people in the hospital. So this is all the support patient engagement strategy, like there's a lot of people that just sit in rooms and talk to each other. They don't ever touch a patient, right? So that along with tools, and then they talk. So they do they contract other people to do the work and stuff. So that's IQV, and they have money. So you're not worried about jumping in here and then getting hit with some sort of weird trial data or FDA decision that makes it gap down like 40%. So I think it's interesting for that reason. They have this backlog of 30 billion. So that's what I'm talking about that makes it seem sort of like that data center phenomenon. 2 billion of new bookings is still a lot, even if they don't get to that backlog. And none of these are super spicy industries: R&D, solutions, analytics, contract sales. But you know what? Their main industries are not going away. I don't think the Trump administration is going to cut health data. I mean, it's just so like boring and obscure. It's not like they're talking about a bunch of controversial like healthcare for all stuff, and I don't see any major risk factors. And if you look at a similar company, MEDP, that company is also holding up pretty well. I think it had a little breakdown after a fake breakout, but yeah, see? But it was holding up. It would be great if it held up for IQV's sake, but even as this has gone down 6 days in a row, IQV has, gone up and then come down a little. So I'm not sure they're totally related. I guess if this thing tanks, like back to below earnings, then maybe you want to keep an eye on your IQV position. But otherwise, I wouldn't worry about it too much. So the connection. Those are two ideas. Urban Outfitters, URBN, IQVIA, ticker symbol IQV. If you like ideas like those or like the ones on this channel, hit that like button. The YouTube algorithm sees it and shoots this video around. If you want a free course on how to buy stocks before they go up, hit that subscribe. I'll post that in the YouTube posts for subscribers. And if you want the best idea at the time of the market open, head over to stockscommunity.com and you can see some testimonials. See if you want to jump in that Discord for 7 days for $25. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.